Good evening, I am Ibrahim Sani and this is Market Talk. The Prime Minister has introduced what he himself has called the mother of all budgets. Here to discuss the impact of the budget rollout is Jameel Ahmad, the Global Head of Currency Strategy and Market Research of FXTM. Welcome to the show, Jameel. Now, of course, you flew in to Kuala Lumpur specifically to discuss not just about the budget, but also the ringgit. What are your first or initial expectations on the budget presentation?
Thank you very much for having me. Firstly, it's a pleasure. So I would say the budget is reflective of the improving fundamentals for the Malaysian economy, and there's some positives in there in the budget as well, such as it's going to probably improve domestic growth with the tax cuts. When it comes to the ringgit itself, we actually see more of a limited impact, and that what it will do, the budget, is probably trigger a reaction in the equity market or maybe the bond market. But for the currency itself, it will be quite limited, and we see the currency being driven this week by the upcoming US interest rate decision and any policy guidance from the Federal Reserve.
Now, of course, the ECB also is introducing some slew of measures. We know that both the US and the EU has some significance towards how the ringgit will pan out. And for you to say that the ringgit might see some limited coverage following the budget, does this mean that we have to look forward to or look towards the ECB and the Fed decision to understand better where the currency is heading?
Absolutely. All of the emerging market currencies are still in many ways directed by these international movements such as dollar rally, trader demand for the dollar, and then international developments as well, such as maybe the Catalonia crisis or how other central banks are moving. Interesting that you brought this up, because now we're looking towards other central banks, apart from the US Federal Reserve, moving towards tightening monetary policy, albeit on a very slow basis. This is probably going to present some more risk to the emerging markets, because the focus will move away from the Federal Reserve, lifting interest rates higher. We'll start to talk about the Bank of England, Bank of Japan, ECB, European Central Bank. Moving back to the ringgit itself, the good news is that although this risk will be in the atmosphere, it's going to be very slow for Europe to lift interest rates and for Japan. I think anybody saw this from the ECB conference last week.
Now, of course, the Malaysian economy has registered very strong, steady growth, above 5%. In fact, the Prime Minister in his budget said that it can grow up to 5.5, 5.75% even towards the end of the year. Do you think that there will be a direct correlation between the strengthening of the Malaysian economy versus how the ringgit will move towards the end quarter of this year?
It's quite possible. We've said for a long time the ringgit was completely oversold. If you look at its past performance last year, the year before, it was not reflective of the economic fundamentals. And as 2017 has progressed, we've seen the data has reflected this. Malaysian economic data was actually much better than expected for the majority of this year, and that will likely continue into the end of Q4 as well. We've seen the ringgit rebound for about 6% against the dollar year to date. Of course, a lot of this is because of the fluctuations in the dollar, a lot of weakness, impatience towards Donald Trump policies, as it may be. And this is what's helped the Malaysian currency. But yes, the economic news and the fundamental data on the local economy can still have some impact when it comes to the currency. But the major news is always the international developments.
Of course, being a safe haven currency, the US dollar has seen some fluctuations, if not a lot, and the same instability is happening in the Eurozone as well. Do you think because of these two changes happening with the euro and the dollar, investors would now have to move towards other safe haven currencies, particularly the Japanese yen and perhaps the Swiss franc?
We always like the Japanese yen, and we say in times of uncertainty, whether this is market uncertainty, political uncertainty, or economic uncertainty, the Japanese yen always becomes a trader's best friend. And we've seen this so many times in the past, over the past year. Brexit, we go for the yen. Election, we go for the yen. There's geopolitical tensions, we go for the Japanese yen. The yen's still got a lot of potential. We think there's still risks to the global economy out there, and we personally still like the Japanese yen. I think that it's got more room to move forward this year. The limitation over the short term is that some of these geopolitical tensions and political risks seem to have not escalated any further, so we've seen some profit taken on the Japanese yen over the short term. However, over the medium and longer term, any kind of uncertainty, whether it's market, political, economic, Japanese yen can be favoured once again.
We'll discuss a little bit about Japan's neighbours in the Korean Peninsula, of course, very shortly after the break. But before we go into the break, I just want to ask you on some of the risks that we can expect in this part of the world, in Southeast Asia and Malaysia. What can we expect moving forward for the risk?
Well, what I think is that the uncertain nature of Donald Trump policies and his economic policies could still be somewhat of a risk for Southeast Asia. We've seen this comeback now in 2017 for the currencies. It's not just the ringgit. We've seen a lot of demand for the Chinese yuan, other currencies around the region, because investors have realized that Mr. President Trump will not be able to implement his promises as quick or as successfully as he was going to say. But that undertone of protectionism, tax cuts, trying to bring jobs back to the United States is still going to be seen as somewhat of a risk for these economies in particular. But I would say that this is maybe a market move. When it comes to the economy on the ground, competitiveness is still on the Southeast Asian side.
Of course, and that's why the Asian Tigers are being dubbed as such. We'll go for a short break, but when we come back, we'll discuss a little bit more about what the Prime Minister has said at the Dewan Rakyat earlier today. Don't go anywhere. Welcome back to Market Talk. I'm your host, Ibrahim Sani. Earlier today, the Prime Minister, Najib Razak, spoke in Parliament on North Korea. Malaysia is reviewing its ties with the North and is prepared to sever all connections to the state as international concerns continue to mount over the state's nuclear and ballistic missile. Here is the Prime Minister speaking about the matter.
Tuan Yang Pertua, mengenai keadaan di semenanjung Korea, kedua-dua negara telah menyuarakan kebimbangan di atas keselamatan dan keamanan di rantau Asia Pasifik yang diancam oleh tindakan Korea Utara yang menjalankan program ujian nuklear dan ujian peluru berpandu balistik. Saya telah menyatakan bahawa Malaysia telah mengambil langkah untuk mematuhi kesemua resolusi pertubuhan bangsa-bangsa bersatu yang berkaitan dengan ancaman Korea Utara, antaranya untuk mengurangkan bilangan pegawai diplomatik Korea Utara. Malaysia juga sedang mempertimbangkan hubungan dengan Korea Utara dari aspek termasuk hubungan diplomatik, politik dan ekonomi. Malaysia sedang mempertimbangkan untuk menutup kedutaan besar Malaysia di Pyongyang dan memindahkan akreditasi dari Beijing. Malaysia juga kini telah memperkenalkan visa untuk kemasukan warga negara Korea Utara ke negara ini.
So joining me to discuss this and more is Jameel Ahmad, the Global Head of Currency Strategy and Market Research of FXTM or FXTM. Jameel, as you have just heard, the Prime Minister speaking about the possibility of closing the embassy in Pyongyang and moving all diplomatic missions to the Beijing office or Beijing mission. Is this a clear signal that there is a severe geopolitical tension currently building up at the Korean Peninsula? And how do you think this will impact us?
These geopolitical tensions when it comes to the US and North Korea is something that investors cannot afford to ignore. And also, it's still ongoing. Somebody would say that these tensions have been ongoing for a long time, but there's no doubt in that escalated over the summer months. In terms of how it can impact us, anybody, whether that's Southeast Asia or other parts of the world, this is what we currently see. It looks like these tensions will be resolved by diplomacy. There'll probably still be some underlying tone of some sort of threat, but it would not be on a military action or war. So it looks like a positive sign that diplomacy is being used here, such as some international pressure on North Korea, and you're seeing a lot of pressure coming from the local economy today.
While we see diplomatic actions currently taking place, we also see some military aggression as well. North Korea did shoot, a ballistic missile over Sapporo in Japan. Do you think that these military overtures will move beyond this and go straight into escalation?
I don't think so. I think that both sides realize that military conflict is not going to be beneficial for anybody. It's going to cause a lot of uncertainty politically, humanity, and it's not going to be the route that I think that people want to take, and that's on either side. What we're seeing now is war of words on both sides as well. The US is clearly not backing down. North Korea wants to show its nuclear strength. I actually think that it's positive that more international communities, markets, economies, politicians are commenting on the need for diplomacy. And this is not just in the United States and the White House, where there's been a little bit of war of words aggression from President Trump. Diplomacy actually coming from political correspondence, this needs to be solved by talks. And the same rhetoric we're seeing in Beijing, and we're seeing the same in Moscow and Russia as well. So this is why I think it's heading. Going to be a lot of talks, possibly maybe more international sanctions. And we can call this news today, what's happened in Malaysia, as a sanction as such.
Okay, and before we went into the break, you were speaking about the Japanese yen being a trader's best friend. Now, all this conflict, geopolitical conflicts happening right across Japan's doorway, do you think this will impact both the Japanese yen and perhaps even the Japanese economy as well?
In terms of the Japanese economy, we see a limited impact, unless really Japan is involved in a conflict literally, and I do not believe that would be the case. When it comes to the money markets and the currency, if there is uncertainty and geopolitical tensions, the Japanese yen will most likely benefit. We've seen this in the past, other geopolitical tensions, other market uncertainty. There's no way to say they'll be any different if there is North Korea tensions. And in fact, if you take a look at the tensions in the War of Words in August, you can see that Japanese yen gained a lot, the Japanese markets and the yen. So this is what we see.
The biggest actor here is China. In fact, we are getting you at the right moment because China just finished the 5-year, once in 5-year meeting. And if anything, the president has consolidated his power. In fact, the economy has emblazoned it as the world's most powerful man. Can we have any takeaways from this particular meeting?
When it comes to economic developments and market developments, quite a limited impact. But what we can see is when there is so much uncertainty in the world, we talk about geopolitical tensions in North Korea, what's going on in Catalonia, ongoing news coming out of the US White House, and then of course you've got this ongoing persistent Brexit uncertainty. All of the headlines, news agenda, and eyes were on China last week. And I think this goes quite a significant distance towards explaining and reiterating how important China is becoming to the global economy, to global politics, and China is making more steps towards establishing itself as a superpower, and this likely will continue for some time to come.
Do you think that the renminbi or yuan will see some changes following this particular meeting?
Not necessarily following the meeting as such, but we do think that the yuan has still significant potential over the longer term. China still deals in US-denominated assets. The dollar is still seen as a payment method. But in time, we see China and the yuan establishing itself, not just domestically in China, but these relationships that China is clearly building with other economies, other markets. The yuan will establish itself as a reserve currency. It's already in the IMF special drawing rights basket. That's a very big move for the future. And we see smaller and incremental steps to come in the future as well, where the yuan will become more established, accessible, and tradable.
And of course, China has been investing billions, if not trillions of dollars in various markets, including that of Malaysia. Do you think that these kind of investments will weigh down, or they will continue on this aggressive move to buy assets overseas?
It will continue. It's all part of China's bigger plan. China's embracing internationalization and saying we are open to the global economy, to the global markets, to global citizens. Despite all of the uncertainty, protections, threats elsewhere, this is seen as a very good opportunity for China to establish its global dominance. And it fits in hand with the other projects like accessibility to the yuan, welcoming people into the Chinese capital markets, making the yuan more accessible. By doing these One Belt, One Road initiatives, from having more economic trade agreements with different regions, it really establishes and helps China's longer-term vision.
It seems that with the global conditions currently going into various kind of turmoil, depending on the risk of severity, whether it's Catalonia or North Korea, do you see China as a stabilizing force in a way where China is not behaving erratically? They have been behaving the same way for the past 2 decades. Do you think that the global economy can look to China for some form of stability and perhaps a solution to some of the conflict that is happening right now, for instance, in North Korea?
This is a very good question to ask. Yeah, quite possibly. If you look at the changing world and what investors are now having to adapt to, if you would have said just under 1 year ago about President Trump winning the election, people would have thought that was crazy. A few months before that, when you would have talked about EU referendum, Brexit, the decision, people would have said, no, this isn't going to happen. Same thing with Catalonia just a few weeks ago. So you could say that, yeah, China's showing stability and other markets are showing stability, and investors are really trying to adapt to what is political risk in the developed world. And it's something that investors have never had to get used to before. But 2017 and 2016, you're having to adapt to this, and China's shown stability.
We'll take a short break, but when we come back, we'll discuss at length on Donald Trump's approaching 1-year anniversary of winning the elections. Don't go anywhere. Welcome back to Market Talk. I'm your host, Ibrahim Sani. Today we're discussing at length some of the global economic conditions as well as market conditions with Jameel Ahmad, the Global Head of Currency Strategy and Market Research, or FXTM or FXTM. Jameel, of course, you've traveled the world extensively over the past few weeks trying to get some views and input from the various markets. And considering that Donald Trump's one-year anniversary of winning the elections is approaching fast in early November, how has the world been following his winning of that election?
Well, everybody's definitely talking about President Trump. There's no doubt in there. And many people are probably a little bit surprised still of what's happened, but it's happened. And what we see is a lot more volatility in the market. We can talk about the stock markets in the US reaching record high after record high.
Yeah, exactly. 23,000 last time I counted, yeah, the Dow Jones Index, yeah.
Yeah, it's crazy. It's really insane to think that the market's making so many highs. But then you look on the other side of the coin, seeing even more volatility in the US dollar. And the US dollar has gone from shooting up, that Trump's going to push pro-growth, he's going to implement all these economic-friendly policies. A few months later, reverses, because markets are becoming a little bit more impatient and saying, you know what? We should have seen something by now from the administration if all of these policies are coming in, fiscal reforms, infrastructure spending, tax policies, other policies to bring jobs back to the United States. But really, 1 year on, we haven't seen much. We've seen a lot of headlines, a lot of noise, but when it comes to the actions, we're actually waiting for this catalyst.
Okay, even in inaction, there is something of something that you can tell. It's a telling note, right? So he's been taking office for the past 10 months and no major legislation has gone through. Does this mean that there will be no further, we can expect little to no legislation to be enacted within the next 3 years, him being in office?
Well, actions definitely speak a lot louder than words. And what we can say is that it's going to be more difficult for Mr. Trump to push his campaign agenda than what the markets were pricing in. And I think investors realized this when we saw the battles he had with replacing and repealing Obamacare. This is a very unpopular reform. Even when it was first announced, people were very critical about Obamacare. But Mr. President Trump wasn't able to repeal and replace it that easily. So what I'm thinking is, if that was difficult, just imagine what it's going to be like to implement new tax reforms, cutting the corporate tax rate, where we know about the US deficit, the US is in debt. We know that this is actually going to lead to less government revenues. We believe that it will be much more difficult to push forward these plans. Whether he will be able to do it or not is a different thing. We're going to have to monitor this. There's another 3 years left. He will probably make some waves with some policies, but it's not going to be as much as what the market was expecting.
Okay, and with this in mind, we have to look into cryptocurrencies as well. We have to look into other forms of methods to bring some form of stability and recognition into our lives. The Bitcoin exchange rate has been shooting up. I mean, to say that it has gone up is an understatement. What are your thoughts as a currency commentator? What do you make of this, of Bitcoin?
It's really astronomical moves. This move in Bitcoin year to date, 550% plus. And by the time this interview airs, it could go up even more, the way Bitcoin's heading. What I can say is, as a currency professional and a financial professional, I now need to monitor Bitcoin due to the ongoing demand about the news. This asset obviously has huge potential and probably was underlooked. However, if you look on the other side of the coin as well, we can link back all the previous segments about geopolitical uncertainty, about political risk, market uncertainty, and perhaps, just perhaps, investors have actually been hedging on Bitcoin.
Yes, and this is the part that I want to highlight, because just before this interview, we spoke a little bit about how investors are now using Bitcoins as a currency tool to trade futures in a way. Do you think that this kind of behavior will just continue to exacerbate amongst the investors?
It's possible. Really, we're seeing a lot of demand to talk about Bitcoin, and whether people like Bitcoin or not, when it comes to financial professionals, there's no doubt in that politicians, central banks, and leading investment banks are all talking about Bitcoin. It's the talk of the town. What I do say is that anybody who wants to invest in Bitcoin, who is thinking about cryptocurrencies, just please consider your risk, because trader education is very important. Although Bitcoin has rallied by 550+% this year, there has also been rainy days where Bitcoin has slid by 20%. It's a very risky asset.
Of course, but with this in mind, it's not that easy getting trader education. Proper channels like central banks and the likes don't normally provide such education processes. Do you think that better the media, for instance, people like yourselves, would need to do more to educate the public in terms of how to manage cryptocurrency investments?
FXTM has always invested heavily in client education and trader education as a key part of my job as well. What we would say, and we always say this, is that anybody who wants to invest needs to know about their risk and the risk behind investment, because there always is a risk. We think that Bitcoin will continue to get more popular. I personally believe that Bitcoin will make further highs. It's very clear the market is buying Bitcoin. However, that does not mean, like any market, it will just move in one direction. There are days where the market will go down.
Yes.
Bitcoin does this a lot. It might rebound, but it does go down. This is why traders need to know their risk and protect their investments.
Jameel, thanks for joining us here in Kuala Lumpur for today. Jameel, of course, is joining us all the way from Cyprus. I've been speaking to Jameel Ahmad, the Global Head of Currency Strategy and Market Research. But that wraps up this episode of Market Talk. Be sure to follow us on Facebook, Twitter and Instagram at 5011awani. Download our app and listen to our shows there. And of course, remember, you can also listen to this interview on your podcast. Simply search for Astrawani or Market Talk wherever you get your podcasts. I'm Ibrahim Sani. Thanks for watching. Goodbye.